Welcome, friends and traders. We are going to now quickly discuss the Mandala one more time, which has extended yellow lines as well. So this is the structure of 5 minutes. You can put on 5 minutes, 10 minutes, 1 hour, 15 minutes. We recommend using multi-time frame. The laws do not change. We're looking at the impulse bars. And then we look at this single bar mandala, which is in level 2, which I think we also give nowadays people who are really serious in level 1. And this is the impulse bar, and we see the yellow lines coming up on the top and the bottom. It is giving us the range. If market has hit these lines, they will come and hit on the other side. Earlier we had this boxes, these boxes where the terminal points are. You see the two green lines, and the two green lines. All right, so that is all there is to this extension, that continuing on the laws of Mandela, which we have been covering for a long time. What are we going to do? We are going to use the impulsive bars and where the market is going to terminate. Now other one is right here. If you look at this one, right, at one point we got to stop moving the tool. We cannot continue to move the tool as the new bar comes in. So if market is going impulsing up, we keep the first impulse, or if you want to use the exhaustion impulse, which is right here, last one, then you don't move after that. And then what are we looking for in this case? We are saying, okay, these are my lines. So you have these lines already in place. This is my line, this is my line, right? And this is my line. So we are trying to see if market has reacted, which it did precisely. It is going to go and react on the other side precisely. All right, that's all there is. So that is a simple use case of this. Other one we talk about is curve fitting the impulses. We finding a center point by actually finding the balance bar. Now this, in this scenario, the balance bar is not the bar of interest, which is what we use typically on the impulse bars, right? So here I'm looking for a balance bar. So what is a balance bar? Well, balance bar is a bar which curve fits one side of the equation. So if I'm interacting with this tool at this point and I see, okay, I need to find one side of the equation hit. So this is a good point. Why? Market went up, it hit here, and we are saying, okay, it might hit on the other side. It does. Do you understand? So if I find that spot, I'm expecting this spot to also initiate. So that is the second use case of these yellow lines. This is why they were created, to find those balance points by curve fitting the data. When you curve fit the data and find the balance points, we have some probability that the algos are going to hit both sides. So you have to be on the left side, right? So okay, now I'm here. Now I'm putting it here. What came first? It went up. So this cannot be, this is not a good balance bar because it blew through this, right? It has to, the first part has to be curve fitted. We cannot say it came here later. No, the first impulse is here. This pivot came first. So this first pivot needs to be curve fitted. All right, you got that. This is right here. So when this is curve fitted, now same thing. What came first? The top came first. That's what I'm looking for. I'm looking for something which will entrap my the top first. See, this is a little bit overflow here, but you got the idea. If this is the only bar you could find, let's do this. All right, so what we are doing is we are finding that curve fitted bar. And okay, now we have to move bar by bar, and there it is. Did I know this bar? No. In advance, no. What's going on? Well, what's going on is in curve fitting second scenario use case, we are looking to put the bar where we see market made this first. Same thing what happened here in the small ratio right here. Same thing is happening on the other side. Remember, market is fractal. Time is man-made. We chopped this time. Time is working in continuous domain. We make it discrete by chopping into 5 minutes, 10 minutes. So that is how we can understand. So this fractal happened, same thing happened here. And we did the same thing. We found a bar here, found the first top hit first, and then we said maybe respect the second, and it is. And then we just have to do is look at the oscillations. We have 4 oscillators. We can look at the oscillations. So let's put one oscillator here. So the oscillators we have is balance imbalance, which is telling you from the profile curve where the maximum apex is, the way the POC is, how off you are from the POC. This one is tracking the buyers and seller contracts. One side gets heavy and eventually it becomes exhausted scenario. And then after a while, as market goes higher and higher and higher, the buyers disappear. As it goes lower and lower and lower, the sellers disappear, right? They are trying to cover up their profits. So that is what this one is. This is a master oscillator which has 9 uncorrelated events inside it. Value at price is just going through the same thing. It's like a VWAP. Let's try this one. Now this is a 5-minute chart of ES. Alright. Now what we need from this guy is that it moves very fast, right? And into the levels. So if you look at this guy gave us no indication at all. It should be blue or higher. Here it gave us some indication at this point. You see on the top vertically, that's all you got. When it is chopping in the center right here, this is the center of this. This is the top blue line, as you can see, and this is the bottom blue line. I need to be at these levels to do anything about it. In the center is just rotating across the value area. Nothing much to do on this. The key is that it moves fast into our levels and we respect it. We want at least 2 of these to be at blue lines, right? Okay, that's all there is to it. So this is what we were talking about is the second use case. First use case is same as before. Find the impulsive bars where the terminal points are. Second use case is we curve fit by moving bar by bar by bar. What comes first? And the yellow. We hit the yellows. Don't worry about no first yellow, second yellow. But remember, we're dealing with the big ranges. We're not talking about to the tick accuracy here. Alright, so once we have this location, and we make our mind that we're gonna take the trade, and then we can use our trading grid where the price in level 1, the astro grid, we have those separations of the lines which are your dollar value lines, which says I'm gonna lose 250 for every trade to make 500 or 250 per trade to make 700. So those grid lines can be adjusted, and once you enter those grid lines at this price, at the right location, and then you start making the trades. If you want to make the grid lines much smaller, like only $100 loss, you may have to do it twice. But location, location, location first. And this is what it is. We are curve fitting the first best location, and it respected that. Now we're expecting it to do the same thing. And we did it here in a smaller fractal by finding some balance bar here, and we did it here by finding the balance bar here. And we know this in advance. And then other tricks we can do is look at this numbers inside. See, this number is 9. This day is 27 is 9. So market is going to go there. We have a lot of other advanced grids looking at this. Look on the top. Look inside 9. See that? Boom. So it is gonna take you to successful land. This one is also 9. It came from there. So these numbers are there for a reason. We are looking at frequencies. It's all numbers, frequencies, and frequencies, and frequencies. So it's pretty clear, my friends, how to use this in two scenarios. As you master this, you master your destiny. As you master this, you master your profits. Now in the bottom, if I move this, hotspot, in the impulsive fashion, right? Where's my impulse? Market was going sideways. I got this first big impulsive bar. Now what do I see? Now we have our levels, older approaches. We are going in the zones. Where are the zones? Okay, this is also a zone. This is also a zone. So from this reflection principle, this area was already qualified earlier. This is a zone. Now from the initiate, there was a balance zone. Top reflected the bottom. Now initiative move. This is showing us the zone. And now what we do, we have another screen or other chart which has the astrogrid lines, where you have your astrogrid lines going like this, and they're separated, customized by you. How many point separations you need? 6-point separation, which means you will take a 6-point loss, and you can make it even faster, right? So once you get in this, now you have to start using these lines. So what we recommend is, okay, once you go here, maybe let if you are trading 3 or 4 contracts, just do buy in. This is your ultimate stop loss if this is what we are going to do. So enter, enter, stop loss. You will average out somewhere here. Remember, you're doing this to catch the day's highs and lows. Thank you so much.